Welcome back. We have completed segment 5.7, and in segment 5.7 we have discussed about the concept of depreciation and also the calculation of depreciation, how to calculate depreciation using two methods, that is the straight line method and WDV method. So the next item in the CMA data in the P&L account is the opening stock of work in progress, closing stock of work in progress, opening stock and closing stock of finished goods. But before going to that segment, let us have a small exercise. This will review the concepts that we have discussed in the previous few segments. In an earlier exercise, exercise 1, we have in exercise 1 that we have taken after discussing sales, we have tried to answer a few questions regarding sales, so that to gauge your progress, to gauge your understanding of the concepts of credit, sales and debtors. So in this exercise, let us have a few questions to test your understanding, to see how well you have grasped the concepts of raw material, power and fuel, labor, and other expenses, other manufacturing expenses, repairs and maintenance, other manufacturing expenses, and depreciation. So these questions will test you on the concept that I have discussed in the previous 4 to 5 segments, right? So if you see the first question, if a company has 50 units of raw material as on 1/4/2013, so this is the financial year 2013-14, and the first day is 1/4/2013, right? And this year closes on, and this year closes on 31/3/2014, right? So this question is asking, if the company had 50 units of raw material as on 1/4/2013, that is at the beginning of the financial year, the company had 50 units of raw material, and during the year, the company has consumed 450 units, right? The consumption during the year was 450 units of raw material, and at the end of the year, as on 31/3/2014, the company had 25 units of material left. So the question is, how much material did the company purchase, right? How much material did the company purchase? So let us try to answer this question. So we've discussed while during a discussion of raw material, right? When we discussed the segment on raw material, we have understood this concept. So you could easily answer this question. So let us have a brief review once again. So if a company is using some raw material in the production process, so let us assume this is the production process, right? So into this production process goes some raw material, right? Some raw material is going into the production process, and finally some finished goods is emerging. Okay, fine. Let us focus on the raw material part. So if you see the raw material, the question is saying at the beginning of the year it had 50 units, right? At the end of the year it has 25 units left, right? During the year the company has consumed, so let us indicate by an outward arrow the consumption. So this material is being pulled out. Let us assume this is a store. Let us assume this is a raw material store. It is a storeroom in which material is stocked. So there is an in charge. There is a storeroom in charge. So he is responsible for the receipt of material and dispatch of material. So the only way the material can go out, right? The only way the material can go out is the consumption, right? That's the only reason why you will take the material outside from the store. From the store, why you will take the material only used for consumption. So this will be the production people. The people engaged in the production in the shop floor, right? In the factory, they will take the material. They will raise an indent and the storekeeper will issue this material. So the only way it can go out is the consumption. There is one way, only one way in which the material can come in, right? The only way the material can come in is purchases. So when a company raises an indent from the supplier will apply this material, and the material will be entering into the storeroom. So if you look at the storeroom, right, there is only one way in which the material can come in, that is the purchases. Only one way the material can go out, that is the consumption. So during the year, at the beginning of the year, the raw material was 50, right? At the beginning of the year, the stock in this godown inside this room it was 50 units of material is already available on the 1/4/2013. So at the beginning, the first day, 50 units is already available, and during the year the production people have consumed 450 units. They have consumed 450 units, and at the end of the year, after consuming, and some purchases were made, right? So the company also purchased some material. So at the beginning of the year, when it was 50, and the purchases we don't know, let us call it X, right? So the total material the company had at its disposal to use. not only the beginning, but also not only the beginning stock 50, but also the purchase. So during this year, the company had at its disposal, had the option of utilizing, consuming 50 plus X material, right? 50 plus X units of material the company could have used. However, it used only 450, right? It used only 450. So where is the balance? The balance is in the closing stock, 25 units, right? Is this clear, right? The only way the material can come in is the purchase. The only way the material can go out is production. So at the beginning of the year, when the company had 50 units, and the inflow due to purchases is X, so 50 plus X should be equal to the outflow, that is consumption 450 plus whatever material is left. See, right? Is this equation clear? So 50 plus X should be equal to 450 plus 25. So this is 475, this is 50, so X is 425. So during the year, the company has purchased material of 425 units. Now this will be clear. So during the year, it started with 50 units and it has purchased additionally 425 units, right? And the consumption, the usage by the production people was 450, and therefore you are left with material of 25. Obviously 25 is the closing stock, because initially you had 50 units and you purchase 25. So 50 plus 425 was available to the company for usage. It could use 475. It could have used entire 475 or less, right? Like 450 or 425, 400, anything it have used. So how much it used? It used only 454. So obviously the balance is 25. This is the left. So this is already something we discussed. We wrote a small formula, if you remember. We wrote a small formula saying consumption is equal to purchases plus opening stock minus closing stock. We wrote a small formula. I also told you at that stage this is not actually a formula. This is plain common sense, isn't it? So if you look at this, the opening stock 50 plus the purchases 50 plus 425 is the total quantity of material available at the disposal of the company for consumption. It could use 50 plus 425. This is the maximum, the quantity that the company could use. It could use at the maximum 50 plus 425. Like 475 is the total material available. So what is the total material available? It is 50 plus 425. 50 means opening plus 425 is purchase. Out of this, the company had used only 450. That is consumption. It has consumed 450 in the production process, and the balance is left in the godown as finished goods. So left in the godown as closing stock. So this should be equal to closing and consumption. This is the same formula, right? Consumption is equal to purchases plus opening minus closing, right? So this is a small formula which you can remember, right? So to answer this question, the first question answer is 425, right? So let us see the second question. A vegetable vendor bought 10 kgs of potatoes in the morning at a rate of 7 per kg, right? So 10 kgs of potato, he went to the market and bought at the rate of 7 rupees, that is 70. He purchased potatoes worth 70. Then he went to the market. This is the retail market, right? And during the day he could sell only 6 kgs. Only 6 kgs he could sell. So out of the 10 kg he purchased, 6 was sold and 4 was left unsold. So he sold the 6 at the rate of 10 per kg. See, he bought at the rate of 7 per kg, but he sold at the rate of 10 per kg. So what is the sales? What is the expense? What is the profit for this day? You have to say what is the sales, what is the expense, and what is the profit, right? So what is the scenario? The farmer in the morning went to the wholesale market, right? And he purchased 10 potatoes, 10 kgs of potatoes at the rate of 7 per kg. So he purchased 70 rupees worth of potatoes. Then he went to the retail market. His plan was to sell these 10, the plan, right? The plan was to sell all these 10 kgs at the rate of 10 rupees. So it will be 100. This was his plan. But what was actually the case? He could sell only 6 kgs. So 6 kgs into 10. He could sell only 60. Now the question is, what is the profit? What is the sales? What is the cost? And what is the profit? So if you remember what we discussed on the raw material, we discussed a very important principle called the matching principle. So in the P&L account, when we write the sales, and that's the income here, the income is the sales here. And if you write the expenses, let us say this is the purchase cost. Let us say this is the cost of the potatoes. So thereby you will arrive at the profit, sales minus cost. Okay, fine. So here the sales is very clear. So sales is the actual amount here sold, not the 10. 10 was the plan, but that didn't materialize. So what was the actual sales? 6. So 6 into 10. 10 is the rate at which he is selling. So 10 per kg. 6 kg is sold, so 6 into 10, 60. So sales is clear. So it is 60. The question is, what we should take at what is the cost to be taken? So there are two things you can do, right? For cost, there are two things you can do. One, you can take either the cost of all the 10 kgs which is purchased into 770, or only the cost of the 6 kgs which is sold. 6 into 7, 42. So which is the correct weight of? So this is something which we already discussed. We had a lengthy discussion on matching principle. So if you're not clear on the concept, please have a look at the segment which we discussed in the raw material. There we discussed at length the matching principle. By now you should be very clear about the matching principle. So what the matching principle says, we are not going to take the cost of entire 10 kgs. That is immaterial. The sales is only for 6 kgs. So what is the cost of the 6 kgs? The cost of the 6 kgs is 6 into 7 per kg, 42. Only this you have to take in the P&L account, not the entire 70, right? This is as per the matching principle. I'm not going to repeat the matching principle again because we had a very detailed discussion at various points in the past lectures. So please revisit those lectures again if you have any doubt. The cost you have to take is only the cost of the 6 kgs potatoes which were sold, right? The remaining 4 kgs, that 4 into 7, right? 28. These potatoes which could not be sold will not be coming in the P&L of this year, right? Of this day rather. It will be recognized as an expense only when the next day, when you can sell. For example, in the next day, right, day 2, then when you draw the P&L account, there will have the sales. Sales is the remaining 4 kgs, 4 into 10, 40, right? And then you will take the cost of only those 4 kgs, 4 into 7, 28. Then you will get a profit of 12, right? Is this point clear? So in this day, today, when you draw the P&L account, you have to take the cost of only those 6 kgs potatoes which were sold. So 6 into 7, 42, the profit is 18, right? The layman would say the sales is 60, but the cost is 70. He'll take the cost of the entire 10 kgs potatoes and say loss is 10, but actually there is no loss. There is a profit of 18. This is as per the matching principle which we discussed. So the answer to this question is 18. So this is correct. Sales is 60, expense is 42, and profit is 18. That is the answer to the second question. So the third question is, would your answer in 2 had changed if the product was perishable and had to be sold by night, such as milk or fish? So see here, the reason why we took in this example, when we said sales was 60, that is 10 into 660, and the expense side we told it is only for the 6 kg, what is the cost? 7642, and we had the profit of 18, right? So the assumption here is these 4 kgs which were left, right? This out of these 10 kgs we could sell 6 and 4 were unsold. The 4 kgs could be sold the next day. That was the assumption. Only based on that assumption we have drawn up the P&L account. So in the next day how will our P&L account look like? For those 4 kgs, 10 is the sales. Expenses for those 4, 7, 28. So 12 is the profit. This is how the P&L for the day 2 would have looked. But if the product is perishable, we are assuming that the product is of no use to us by the end of the day. Today you have to sell the products because the perishable product. You have no storage to store a freezer or any other equipment to store the fish or milk, and you have to sell it by today. If you don't sell it by today, the material is of no use to you tomorrow. In that case, please remember, only in that case, your day 1 P&L will look like this. Sales is you only could sell only 6, so 6 into 10, 60 is correct. But the expense in that case will be all the 10 into 70. In that case, definitely you incur a loss of 10. This is the distinction clear. In the earlier example, in case 2, reason why we got a profit of 18 was, we said out of the 10 kgs potatoes, 6 were sold and 4 were unsold, right? So the layman, when he said the profit, there is no profit, there is loss, he's saying the profit is sales minus expenses. So sales you could sell only 6 kgs at the rate of 10 minus expenses 10 kgs which he purchased at the rate of 7. So 60 minus 70 is a loss of 10, right? We said this is not correct only because the 4 which were left unsold, for us it is not a loss. This is not a loss to us. This is only just a case of, it's a deferred profit. Profit is not coming today. Tomorrow it will come, because these 4 kgs potatoes you can sell tomorrow. Based on that assumption, you said this is not the correct way to calculate. You said sales is 6 into 10 minus expense is only for these 6 kgs, 6 into 7, 42, and thereby you arrived at a profit of 18. Now the assumption is these 4 kgs could be sold, but if the 4 kgs could not be sold, then day 2 will not arise, which means your profit will then be the day 1 itself. It will be the cost of the entire 10 kgs potatoes, right? At 70 you have to take. The layman is correct in this case. The sales is only for 6 kgs at the rate of 10, 60, but the cost is for the entire 10 kgs, because there is no tomorrow. Tomorrow these products are of no use. Now you are going to take the entire 10 kgs. It will be loss of 10. Is this are these two scenarios clear? Right? So our answer into would definitely have changed if the product was perishable and had to be sold by today, right? So let us take another example. This will further clarify the concept of matching principle. A real estate developer is constructing 25 villas, right? He has so far completed 10 villas, and each villa has spent 1 crore. That is the cost of construction for each villa is 1 crore. And work on 3 other villas. There is 1.5 crores on these. 3 other villas are under progress. These are not completed. 10 are completed, 3 are under construction, and so far he has spent 1.5 crores. Let us assume 50 lakhs, right? 3 lakhs on each villa. So 50 lakhs into 3 was 1.5 crores. So this is under progress. 10 are totally completed. So 8 customers have so far bought these villas, and the rate was 1.5 crores each. So the cost of construction was 1 crore. He could sell at the rate of 1.5 crores on each villa, and they occupied them. So these 8 customers have purchased these flats and occupied them. Now you have to calculate what is the profit. So again, this is the matching principle. You have to calculate as per the matching principle. Let us do that. So if you see the actual construction, the expenses were spent on 2 categories. One is the totally completed and sold, right? Completed but unsold, and there was third category, that is this is not completed, this is under progress. So the builder had incurred 3 types of costs. So the cost in the first category, completed and sold, these are 8 flats. Actually 10 flats are completed, right? After this 8 were sold. Completed and sold was 8 at the rate of 1 crore is the cost of construction for each villa, right? So this is 8. Completed but unsold is 2 into 1, right? So two villas were completed. Out of those 10, 8 were sold and 2 were unsold. So these 2, the cost of construction is 2 into 1, because 1 crore is the cost of construction of each villa. So this is 2. And under progress is there are 3 villas, and the work done so far was 0.5. So 1.5 crores was incurred on the incomplete villas. So totally he spent an amount of 10.5 crores, right? Sorry, 11.5 crores, right? So he totally spent an amount of 11.5 crores on the construction of this villa so far. But if you look at the sales, right? If you look at the sales, only 8 customers. So the customers will obviously look at only this part. They don't want partially completed villas, and these villas are completed but were not sold anyway, right? So the 8 customers have purchased these completed flats. So the sale value is 8 into 1.5. He sold the villas at the rate of 1.5 crores per villa. So here he realized 12 crores, right? He realized 12 crores. Now the question is, what is the profit? So if you were to calculate the profit in the P&L, if you take the sales, the expense, sales anyway is clear. Sales is 12 crores, right? 8 villas is sold at the rate of 1.5, so it is 12. That is clear. So what is the expense? So here, should we take the entire 11.5 crores which he incurred? So that is the question. Should we take the entire 11.5 crores, or should we take the cost of construction of only these 8 villas which were sold? In the P&L side, under the income side, we are taking sale of 8 villas, right? So should we take the cost of only these 8 villas? That is 8 into 1, 8. Or should we take 8 plus 2, 10? So what is that we have to take? Again, matching principle comes to a rescue. The matching principle says, what is the income side showing? It is showing 8 flats. So show only the cost incurred for constructing these 8 villas, only those 8 villas, because the remaining villas would not be sold. as on the date of drawing up this P&L account, the remaining 2 villas were not sold and the remaining 3 villas were under progress. This has nothing to do with sales. They're not contributing to sales. So P&L account, the matching P&L says only those expenses which have contributed towards sales, only those you have to take in the P&L account. So these 8 villas contributed to sales. They have a realized amount of 12 crores at the rate of 1.5 per villa. So what is the cost for constructing these villas? Only these 8 villas, 8 into 1 8. So take only 8. So your P&L account will be, expense will be 8, income is and profit is 4 crores, right? Is the concept clear? So what is the profit? We have discussed what is this profit, right? This profit is 8 villas at the rate of 1.5 is the sale amount. This is 12 crores and expense is only for this 8 villas, 8 into 1 crore, that is 8. So profit is 4 crores, right? Let's take a look at the next question. The next question asks, the builder spent total of 11.5 crores. We have seen already, right? 8 crores for the completed flats, 2 crores for the completed but not sold flats, 1.5 for the partially completed flats. So 11.5 has completed. He has spent a total of 11.5 crores. But the expense we are considering is only 8 crores. While arriving at the profit, we are considering only 8 crores. So where is the balance 3.5 crores shown? So are we not going to show the 3.5 crores? Right? So we said in the P&L account, under the sales side we are showing 12 crores. Expense side we are showing only 8 crores, even though 11.5 crores was even though 11.5 crores were incurred. So 8 crores out of this 8 crores only you are showing here. So what about this balance 3.5? We are going to show it. Okay, in the P&L account you are not going to showing. Fine. But we are going to it. Where are you going to show it? So the answer to this is this 3.5 will go to the balance sheet. We have not yet come to the concept of balance sheet. That will be discussed in the next chapter. Is chapter 6. We're still in chapter 5. But please note that we have partially discussed this concept in an earlier segment. Not fully, but we have given the bare concept, so you should be able to answer this question. This 3.5 crores will be going into the balance sheet. Whether under assets or liabilities, you answer this, it will be under assets. Because this is work completed, but amount is not realized. How did we define assets? We said anything that can be converted into cash in future. So this 3.5 crores which you have spent, in future when you said it is going to be converted into cash, it's going to realize cash for you. So this is an asset. Asset is anything that can be converted into cash. Land is an asset because if you sell it, you will get cash. Building is an asset. Machinery is an asset. Your stock of raw material, in the godown, that's also an asset because if you sell it, it will be getting you some cash. So in the same way, this 3.5 crores, which we call as work in progress or finished goods, right, in the inventory, because it is real estate, will show in the under the work in progress. So this work in progress is a current asset. It's an asset because it will be converted into cash in the future. So this will be shown, the answer to this question is it will be shown in the balance sheet under work in progress, right? We'll discuss it when we come to chapter 16. Let us take the next question. The labor salaries for the month of March 2013 totaling 2.25 crores could not be paid by a company, right, due to financial difficulties. So the company has paid salaries till February. For the month of March, the labor salaries totaling 2.25 crores, the company could not pay because of some financial difficulties. And then there is also a power bill of 0.75 crores, out of which the company could pay only 0.4 crores. So out of 0.75 crores power bill, the company paid 0.4 crores and 0.35 is pending. So the company has totally dues of 2.25 to the labor and 0.35 to the electricity company. So 2.6 crores is pending. So the question is, what is the labor and power expenses to be shown in the P&L accounts of 2012-13 and 13-14? So this expense is pertaining to March 2013, that is financial year 2012-13. So what is the labor and power expense to be shown in the P&L account of 12-13 and 13-14? Right? Assuming labor and power expense of 13-14. So the next year, let us not be worried about the expenses for the next year, but let's focus on the expenses of this year only. So what is the labor and power expense to be shown in P&L account of 12-13 and 13-14? So actually this, I slightly modify this. Actually this should actually read like this. Assume labor and power expenses of 2013-14 is nil, and also assume that labor and power expenses from April 2012 to February 2013 is also nil. So there is an additional assumption we are making here. So we are the point I'm trying to make is we are focusing only on the payment for the March 2013. Prior figures were not given. Actually for the year financial 2012-13, it's comprising of 12 months. So these are the 11 months and March 13 is the 12th month. But these figures are not given to us. Let us assume nil. And the next year 13-14 also, let us assume it as nil. Okay. So let's focus only on the March 2013 figures. So for this month, the labor expenses were 2.25 crores, but the company could not pay. So let us assume the company might have paid this in the next year, right? Because this is March. If it has paid in April 2013, that pertains to financial 2013-14. So the question is, should this 2.25 crores be shown in the P&L account of under expenses, and the expenses labor charges. Should it be appearing in the P&L account of 2012-13, this 2.25 crores, even though we didn't pay, or because we are paying in the next year 2013-14, it should appear in the P&L account of 13-14. So this labor 2.25 crores, should it appear in the financial year 12-13 or 13-14 is the question. If you remember, we discussed in great detail about a concept called accrual system of accounting. We said that the accounting which we follow in the financial statements of all companies is the mercantile system of accounting, also known as the accrual system of accounting, where the actual cash flow is immaterial. We discussed this, the cash movement is totally immaterial to us. The cash flow is immaterial. What is important is only the event. So when did the event occur? Right? Talked of sales. We said if a company makes a sale in March 2013 and it, say for example 10 lakhs, sold a product for 10 lakhs, but it sold it on credit. Credit means it did not accept cash right away, so it gave the customer some 45 days or 60 days to pay. So this payment will be receiving after 45 days, that is in April 2013. So the material was sold in 10 lakhs. The material was dispatched, it was sent to the customer in March 2013, whereas the payment will be received in April 2013. Then we said, should the sales appear in the, should it be a sales in the year of 2012-13 or 13-14? There we discussed under the concept of accrual system of accounting, it's immaterial when you receive cash after 45 days or after 19 days in this year 2013 or 14 or 15. When you receive cash is immaterial. Only what is important is the event. So when did the sale occur? This sale occurred in the financial year 12-13. March 2013 is financial year 12-13. So since this event occurred in 12-13, we are going to show this as a sale for the year 12-13, even though you are going to receive cash in financial year 13-14. This is something which we discussed earlier. So please refer back to the concept of accrual system of accounting. So here also, even though the power bill of 2.25 crores could not be paid in March 2013, which is pertaining to financial year 13, right? And it's going to be paid in the next year, that is 13-14. Even then, this expense should appear in the P&L account of 12-13 under the expense of power. This 2.25 should come, even though you didn't pay. Why? Because this is pertaining to the production of March. So using the power, the company has run some machinery and produced certain goods and sold, right? So the event, everything is happening in March, right? When the event is happening in March, you have to show, we are considering only about the event. So when was the power consumed? The power was consumed in March 2013, that is financial year 12-13. So show it as an expense in P&L account of 12-13 only, even though the company did not pay to the power company. Similarly, I'm sorry, that's not the power bill, that is the labor expense. So even though this 2.25 crores, so the company has incurred 2.25 crores of labor. So 2.25 crores, this labor has worked in the month of March, produced some goods in March, right? The production is pertaining to March. The labor has offered their services in March. The goods were produced in March. Using the services of this labor, the goods were produced in March. So the event, the entire production, the labor service is for in the month of March, which is the financial year 12-13. Therefore, you have to show it as a in the P&L account under labor. This 2.25 crores you have to show in the financial year 12-13, even though the payment was not made. Similarly, the power bill of out of the 0.75 crores, 0.4 was paid in. 0.35 could not be put, but we are not concerned with the movement of cash as per accrual system of accounting. Whether the company paid 0.4 or 0.2 or didn't pay anything, that's immaterial. What is the total power bill? 0.75 crores. When was this power consumed? It was consumed in March. When was the good produced? The goods were produced in March. Everything pertains to financial year 12-13. So in the P&L account, so the answer to this question is in the P&L account, you have to, in the P&L account of 2012-13, you are going to show sales and here various expenses, and when you come to labor you have to show 2.25. When it comes to power you have to show 0.75, not 0.4 and not 0. So the first option is as per the layman. So the layman will say you did not pay any salary, so treat it as 0. You paid only 0.4, so show in 0.4, so 0, 0.4, right? And in the next year, financial 13-14, when you actually pay, show the 2.25 labor charges and the balance 0.35 payment to the power company, then you show. So this is as per the layman. But we are saying show the entire 2.25 and 0.75 in 12-13 only. And the next year 13-14 you have 0-0, right? This won't be carried forward. 0-0, because we're assuming labor and power expenses of 13-14 are nil. So the correct answer is 2.25, 0.7500, right? Let us see the next question. If the rate of depreciation is 15% and the method followed is WDV, right? So in which year the WDV of the asset will become 0? This is actually a tricky question. Let us see this. So the rate of depreciation is 15%. I have just given this 15% for confusing you, right? Whether it's 10% or 15 or 20%, it's immaterial. This is not going to answer our question, right? That is immaterial. So we are saying under WDV method, when will the value of the asset will become 0? So please recall when we spoke of SLM method, right? When we spoke of SLM method, let us take an example of the cost of the asset is 20 crores and the useful life, the life of the machine is 5 years. So every year you're going to show depreciation of 4 crores. Please recall that we have discussed this already. I'm just repeating, right? Please refer back to the segment on depreciation where we discuss this in detail. I'm just giving you a small review to answer this particular question. So under SLM, we said that for years 1, 2, 3, 4, 5, the gross block, that is the original cost of the machine, is 20 crores. And the depreciation which we are going to show for this year, for a particular year, for year 1, it is going to be 4 crores, right? And the second year also 4 crores. In SLM, in every year, you are going to uniformly depreciate the asset. So 20 by 5, 4, every year you are going to show 4 crores, right? So the value which you are going to show in the balance sheet, that is the net block, is going to be 20 minus 4, 16, 16 minus 4, 12, 12 minus 4, 8, 8 minus 4, 4, and 4 minus 4, 0. This is something which we already discussed, right? I'm not going into depth how we are going to calculate this. This we have already discussed in an earlier segment. Please see the segment. So here, the asset value is finally becoming 0. Under SLM, the asset value is finally becoming 0 because we were taking 4 years for 4 crores every year depreciating is becoming 0. So in SLM, the asset value will always become 0 at the end of the how many years you consider, whether it's 5 years. For example, if we were taken 10 years, so then 20 crores by 10 years. So depreciation is 2 years. So up to 10 years, you'll depreciate every year 2 crores, 2 crores, 2 crores. So at the end of 10 years, the asset value becomes 0. So in SLM, the value of this machinery, the net block, the written down value will always become 0. But in WDV method, please note that in the WDV method, the asset value will never become 0. So the answer to this question, in which year the WDV will become 0, it will never become 0. That is because of the mathematics involved here. So what we are doing in WDV is, for each year, let's assume this is only for 5 years. So the cost of the machine is 20 crores, 5 years is the life of the asset, so 4 crores, this is what we did in SLM, uniformly 4 crores. But what are you going to do in WDV? We discussed this already. So in WDV, the gross block is 20 crores. We'll start with 20. The depreciation is, in the first year it will be 4. The accumulated depreciation is 4. The written down value is 16. So in the next year, what we do? Let us assume that the depreciation is 20%. So now we are going to depreciate 20% of 16. Earlier it was 20% of that cost of machine 20 crores for every year. 20% of 20 is 4 crores. So every year under SLM we depreciate 4 crores. But here it's going to be 20% of 16 only. So it will be 3.2 crores. So for the year 2, the depreciation will be 3.2. So gross block is still 20 for all years, 5 years it will be 20. Now the depreciation accumulated is 7.2, 4 plus 3.2, 7.2, and the net block is 20 minus 7.2, that is 12.8. Right? So what you do in the third year, the depreciation will be again 20% of the written down value of the previous year. So this will be 20% of 12.8. So please see the difference. Earlier, under SLM, every year it is going to be 20% of the cost of machine, that is 20 crores. So here it is going to be 20% of the written down value of the previous year. So for the second year it will be 20% of 16. For the third year it will be 20% of 12.8. So what is 20% of 12.8? 2.6, right? So the accumulated depreciation will be 4 plus 3.2 plus 2.6, that is 9.8. So the written value will be 20 minus 9.8, that is 10.2. Next year 20% of 10.2. So this is how the WDV is calculated. So now you have to understand that this depreciation amount, right? See this depreciation amount 4, 3.2, 2.6. It will go on decreasing, but it never becomes 0 because ultimately you are taking 20% of the previous year value. The value will decrease, right? It will decrease, no doubt, but it will be some small value left. It will never become 0. So we already discussed this, how we are going to address this problem. We are going to address this problem by in the final year we are going to push the entire WDV into the depreciation to make it 0, right? So please recall the discussion. Once again I am going to show the calculation here. See, in the fourth year it will be 20% of 10.2, right? 20% of 10.2, that is 2. So accumulated depreciation will be 4 plus 3.2 plus 2.6 plus 2, that is 11.8. The written down value will be 8.2. Next year, final year, we are assuming that the life of the machine is 5 years. So 20% of 8.2, that is 1.6. The accumulated depreciation will be 13.4, right? So the written down value will be 20 minus 13.4, that is 6.6. So please see that the WDV has never become 0. It will never become 0 in this method. It will go on decreasing, but there is some amount left in the final year. Even if the life of this machine is 10 years, right? It will go on decreasing 5, 4, 3, 2, but some small value will always be left under this method. So what we do, we already discussed this. In the final year, what we are going to do, let us assume that the life of the machine is 5 years. What we are going to do, in the final year, the depreciation, we will not take 1.6, we will directly take the previous year balance of 8.2. So directly we will take this 8.2. So now the accumulated depreciation is 11.8 plus 8.2, 20, and the WD will be 0. So this is something which you already discussed. The calculation is a bit cluttered here, but we did this calculation step by step in an earlier segment. Please refer the segment how you are going to calculate depreciation of the WDV. So we address this problem. There will be some amount left in the WDV method in the final year. So what we did, the previous year entire WDV 8.2 will be dumped into the depreciation for the final year. Thereby the asset value will become 0. Right? This is how we addressed it. This is what we're doing manually, but as per the calculation, WDV will never become 0. Right? So the answer to this question is never. It will never become 0. We are making it 0 manually. Okay. So let us see the last question. So the life of the asset is 5 years. Depreciation as per SLM is S1, S2, S3, S4, S5. Depreciation as per WDV is W1, W2, W3, W4, W5. So in which of these following holds good? Whether the sum of the depreciations as per SLM, S1 plus S2 plus S3, 4 plus S5, whether is it greater than the sum of depreciations under WDV method, or is it less than, or is it equal to? So we are saying, please see this. So we have just now discussed the calculation under two methods, SLM and WDV. In SLM we have taken the example of 20 crores machine being depreciated over a period of 5 years at the rate of 4 crores. So in the first year S1 the depreciation is 4 crores, S2 it will be 4, and in every year it will be till 5th year it will be 4. So the total depreciation is 20. That is the entire cost of the machine is being written down. So by the end of the year the value will become 0. What we're doing on the WDV, right? In the first year 20% of the cost of machine. So W1 will be same 4 crores. But in the next year we are calculating 20% of 16, right? Because 4 crores is already depreciated. So the written down value is only 20 minus 416. Of this you are calculating 20% of 16. So the depreciation in the next case will be only 3.2, not 4. So WT is 3.2, and it goes on. So maybe W3 is something 2.8, W4 is something 2.5, something like that. So if you see the calculation, W5 maybe say 1.8, whatever it is, the values I made it. So if you see the total will not come up to 20. This will be something less than 20. This is something which we already discussed, isn't it? It will be less than 20. So always S1 plus S2 plus S3 plus S4 plus S5 will be greater than the value under the WDV method. So this is correct. S1 plus S2 plus the first one is correct. But in practice they will be made equal. How we are going to make equal? At the end of the 5th year, assuming the life of the machine is 5 years, the depreciation in the 5th year will be showing as the 4th year closing balance in WDV. So thereby the asset value will become 0. So in practice we are going to get 20 crores if the life of the machine value is 20 crores, both under SLM and both under WDV. The sum of the depreciations is going to be 20 crores, because you are going to write down this entire 20 crores in 5 years in both cases. So in practice it will be both will be equal, but in theory, if you're not going to do this adjustment, this manual adjustment, always S1 plus S2 will be greater than W1 plus W2, right? Hope you have got most of the questions correct. We have discussed 8 questions. To review the concepts we discussed in the segments of raw material and depreciation. Basically, we have discussed the matching principle and accrual concept of accounting. So if you're comfortable with the concepts, I think you should have answered most of these questions correctly. Anyway, if you have got some questions wrong, please review the relevant lectures once again and watch the videos and try to understand the concepts, right? With this, we have come to the end of this exercise 2. In the next segment, that is 5.8. In the next segment, 5.8, we'll be discussing the concept of opening and closing stock of work in progress and finished goods. That is the next item in our CMA data. So see you then.